Thank you for joining today's session. This is the Let's Get Technical series, and I am Kavita, Agrawal, the founder of EXP-Invest. And we are here today to specifically discuss how we made a profit of 23% in a matter of just 2.5 months in one stock called ALKEM. The reason why we are today is we want to get into the details of two things about which led to the success of this trade. One is the analysis, one is the execution. I always say in my sessions that knowing the name of a stock is not going to make you money. If you want to be a profitable trader, you need to know the right time to buy the stock, to sell the stock, and the right price to do that. You need to know the name of the stock. A lot of people make this mistake of relying on information from random WhatsApp groups or Facebook groups or websites or business channels or TV analysts and then make the decision to put their money into stocks and also sell the stock. See, this is the reason why people have lost money in super trending stocks like VVL, Bajaj Finance, Naukri, even Happiest Minds. Just few days back, someone was saying the Happiest Minds is the worst company because they lost money, which is very far from truth. If you want to make money in the market, you need to know not just that the company is good fundamentally, you need to know that it is the right time to buy your fundamentally good company. Yesterday, I was talking to one of my prospects, and from what he said, it was very clear that he had entered some stocks, but had now become a long-term investor because the stock did not play out in line with his views. This is a very bad strategy to follow, because this is actually the very absence of strategy. When you enter a stock, you need to know why you're entering it and what is your exit strategy. Only then will you be able to optimize your capital's application and manage your risk properly. With this, let's move on to the chart of ALKEM. We will study how we made the entry, and then we will study how we made the exit and why we made the exit. On the screen, you can see that this trade of ALKEM has been shown. The buy average was around 3693 and the sell average was around 4544, which was quite recent. Let's go to the chart and look at the analysis. This is the average price. You can see the purchase of the stock actually happened in tranches. The first was somewhere around 3, the second was somewhere around 3490. And soon after, the stock went up. And where did we make the exit? We made the exit somewhere over here. I'm going to mark this as white. It becomes bright over here. This is the that we were able to capture. Now, let's take a look at the same trade on the daily time frame. And we will go each time frame lower. On the daily time frame, going full screen on this, you can see on the broad side, the trend of ALKEM is very positive. The three things that you need to look out for when you are scouting stocks to go long on: fundamentally strong companies, liquid stock, uptrend. What happened here was, by the time you were entering, the stock had already given a very strong upside here. Let's take the pencil. Here, a very strong upside had already unfolded. And look at the volume. What is the volume suggesting? The volume is suggesting that every time the stock caught on strong momentum, it happened against strong volumes. I have already circled the volumes for you. What this suggested was that the uptrend is definitely very strong. Why was the price correcting here? This was a mere breather, and different stocks have different tendencies. And because ALKEM is what I like to call a momentum mover, it moved very strongly. It moved 41% in a matter of 200 days, which is phenomenal movement. Now, this decline that happened, if you will notice, the volume profile declined, which means that the price, when it was increasing, it experienced increasing participation. This is a sign of a strong uptrend. And then when there was some correction, the price started to go down, we see the volume also started to decline. What this told us that the uptrend is still strong, and this correction that we see actually does not have a lot of strength. I am a full-time swing trader. Within swing trading, you need to identify the different personalities of different stocks. For instance, ALKEM is a kind of stock that you can't trade for 2-3 weeks, or rather it's not optimal to trade it for 2-3-4 weeks of holding. This stock has a tendency to move in one direction for extended period of time. So you have to mentally prepare yourself that if you're going to make a position, as long as the stop loss is not triggered, you should be able to hold on to the stock for at least a period of 3 to 6 months to optimize your holding. What happened? This correction, when this started, and when this correction reached this green zone. Why this green zone is important? Because this green zone coincides with the previous stock. So when it came close to the green zone, this was a signal for me that it might be a time to start buying. Along with that, the price also took a bit of a support at the yellow line that you can see. This yellow line is the 50-day moving average. When a stock is in very strong uptick, the important moving averages like 50-day, 100-day, 200-day lend the necessary support to the price, especially on the daily time frame. When the stock bounced up from the 50 EMA, that was the first time that I should allocate some capital. Now remember, there are times when you have to allocate your capital all at once because the stock may move really fast. But there are also times when you need to infuse your capital into a position or into a holding. ALKEM at this point of time was a stock where I did not make a lump sum purchase. Rather, I made a staged purchase. 2 of those purchases are marked on the chart. I actually made around 4 executions in this to create my total position. Now, the daily time frame. What did the daily time frame tell us? The volume profile was very much in. The daily time frame also told us that we need to be mentally prepared to create the position for around 3 to 6 months. Looking at the RSI now, because obviously we have plotted the indicator on the chart, which means that we need to study the indicators across each time frame. On a side note about analysis and methods of analysis to help you become better, when you use indicators, you need to commit yourself or you need to mentally prepare yourself or take that much time for your analysis that every indicator that you have plotted on the chart, you should be able to study them. And if you're using multiple time frames, which by the way, you absolutely should study, you will need to study all your indicators across all these different time frames to get a holistic picture of what your stock is doing, what it is capable of doing, and what it feels like it might do in the next few weeks. Because only then you will be able to make a proper decision. Coming to RSI on the daily time frame, what I can clearly see is that RSI was super bullish when the peak of 4235 was forged. How do we know it was super bullish? Because firstly, the RSI went strongly above the level of 60, 70, and it sustained for a very long time before coming into correction. Even when it came into correction, right, look at where it took support. It took support right at the 200 EMA of the daily time frame, and it took support at the level of 40 on the RSI in daily time frame. These are two very positive signals that we again got on the daily time frame. Now, your question might be that the support on the 40 level in daily time frame came after you purchased the stock. The previous trend that unfolded, that trend was strong that I decided that I should absolutely go ahead and start purchasing the stock. I had a stop loss in mind. And what was my stop loss? We looked at that in the 75-minute time frame. Let's move on to the 75-minute time frame. Now, the reason why I also started purchasing the stock at this point on the 18th of August 23 was that number one, the stock took support at the 200 EMA of the 75-minute time frame. You can see that right here. Look at how the stock has been consolidating here. Moving on. The 75-minute time frame, what I can see here is that number one, the support started coming in from the 200 EMA. That is when we made our first purchase. This first purchase that we made was barely 20% of our position. This was just to put some skin in the game to show that we have conviction on this. And also the stock had declined pretty sharply by then. What happened next was, you will see that after this small purchase, right, the 75-minute time frame came to take support on the. That is when it started to go up from that support. That is when we bought the second installment right here. And after that, the stock came down. It broke this green support zone and it came to visit the second support zone. We also, this area is where we made around 50% of our purchase. And the remaining purchase was made when the low got forged. So you can see that this point we went ahead and we purchased some more of the holdings because the RSI on the 15-minute and the 75-minute was quite subdued. We made sure to wait, to be patient. Before we bought the stock, we waited for this RSI to come down below the level of 40 on both 15-minute and the 75-minute time frame before we bought the stock. When that happened, that was a signal to go forward with it. We did. We allocated some more. And then when the stock came down, it broke one level of support and it came down to take support at the next one. This is where we bought the last piece of our allocation. Now let's talk about the stop loss. Because if you see between the first point of purchase to the ultimate point where the stock bottomed out, there is a difference of 9%. And when I did the initial analysis of the stock and I was ready to start allocating, one of the main reasons why I chose to infuse capital in this stock eventually was that I could see that there was potential for the stock to decline significantly. And in a situation where you are eyeing a stock which has a tendency to give strong upside, but the potential downside can be significant, in that case, the best way to limit your losses or limit your exposure is by using a stage or installment base. You make the first purchase of a small, maybe 10 to 20% of your total planned allocation. The second and the third purchase can be slightly higher, maybe 25%. And then again, as you get conviction, or you can wait to allocate your rest of your capital when the stock starts to move in your direction also. Or if it forges a final low, then very close to your stop loss, you can make the last installment. Here I chose to create the last installment right above my stop loss. Here you can see the 200 EMA is there for the trend. My stop loss was just below the 200 EMA. Now, if the stock had gone any further, my stop loss would have been triggered because my original stop loss was somewhere around the level of 3,400. That stop loss would have been triggered. Luckily, it did not. You see the volume on a more granular level on this histogram of the volume chart, you can see the volume actually started increasing even before the last low was watched. Not only that, on the 75-minute time frame again, even the RSI was giving a very massive positive divergence. This might all be looking very attractive to you, and you might be thinking that I had a huge level of conviction considering I've held the stock for 8-9% loss or downside. The reason why that conviction came is because I do something called past trade analysis. Every quarter, I study the stocks which I exited in the previous quarter. My previous quarter, the quarter before the last quarter. Suppose now it's the end of December. In end of December, I will be studying the stocks which I had exited before October, so that the emotions associated with it could get enough time to dissipate and I can look at things objectively. And what I saw was that in the art of setting my stop losses for different stocks, it was very important that I focused on managing my capital allocation to manage my risk exposure in stocks where the potential upside is very strong. If the underlying trend is strong, but the stock has a tendency to take big corrections, like 20% correction is a pretty massive correction for a swing trader. If my stock has a tendency to give 20-25% corrections, then I need to be prepared to at least create or accumulate my position when I'm doing a buy on dip strategy in at least 50% of the downside. You can do two things. You either create your position before the rally begins or you create your position after the rally begins. My problem with after the rally position creation is sometimes the rally unfolds very quickly. For instance, look at this chart of the decline from the peak of 4226 all the way to the, or rather from the point that I started creating the position to the actual bottom, it took around 48 days. And it took around only 30 days to come back to the same level. The upside is actually faster. And this, by the time the first high got breached, if you see the point of time that it took to reach or cross the first point of entry was just 9 days. Essentially, if you wait for a confirmation and execution, you will get a lot less time to react. My strategy is to create positions in stocks which have the support from momentum or tailwind on a time frame higher than my action time frame. So my action time frame is 75 minutes and one higher time frame is the daily time frame. I found ALKEM and I saw that it is looking very strong on daily time frame. It is right now undergoing correction. And I started making the entry. Some positive signals had come in. The stock had taken around 10-11% correction. I mentally prepared myself that the stock might go 8-9% lower from here. I set my stop loss there. Now, as a trader, I never want to expose more than 5% of my capital. But I also don't want to let go of a good opportunity because out of sight, out of mind. Right? What I did was I allocated just 10% of the planned capital so that I can allocate bigger chunks when the price actually goes down. On a price cost average basis, my actual stop loss percentage was significantly lower than the 8-9%. I exposed a mere 5% capital on this. Let's go one more time frame lower because even the 15-minute time frame plays a very important role in decision making for me. Once I have my thesis or once I have my big picture from the daily time frame, I look at what I need to make my decision on the 75-minute time. And then I make my executions on the basis of the 15-minute time frame. That is, the 15-minute time frame will actually tell me whether to go or no go. Again, the first piece of purchasing that I did, this happened right here when the stock when the RSI on the 15-minute time frame, right? Let me some lines. When the RSI on the 15-minute time frame gave a very decisive positive divergence and actually moved above the high of the positive peak. This is the peak of the positive divergence. And you see how well the point of establishing a new high on the RSI 15-minute, how well it coincides. I made my first allocation. And then you can clearly see the phenomena of positive range shift also because for a long time, the RSI did not come below the level of 30, which was again very encouraging. I made another purchase there. Then there was a small breach, but after the breach, you can see again a strong positive divergence came up, which is where I again bought some more of the stock and set my stop loss for good. After this, once the rally started, now let's get into how did I go about revising my stop loss. We'll also draw a purple line to show resistance that we waited to get breached, that we waited for the price to overcome before we could revise the stop loss. This is the first stop loss and this is the first resistance. We can see that the price first reacted to the first resistance and did not come down. This is the reason why, again, I wait for the previous resistance to get breached before I revise my stop loss. Because if I had looked only at this unfolding of the rally and revised my stop loss, if I had done that, then what would have happened is that I would have gotten stopped out somewhere in this zone. This lesson again has been derived from the past trade analysis that I do. Initially, a lot of times it happened that in positions where I could have genuinely booked 30 to 40% profit, I got stopped out too soon because I changed my stop loss very early. As somebody who's been doing analysis for 12 years, when I started trading full time 3 years back, this was a very big self-realization for me to conclude that analysis and trading are two very different ball games, which means you can be a great analyst. You have to become a great trader from scratch. You don't get any waivers on that. When you're taking a fresh position, maybe in a stock reversal, maybe a buy on dip category entry, in both the cases, you have to wait for the first resistance to get breached before you revise your stop loss. If you don't, then your analysis is going to go down the drain. Basically, it's going to go to waste. You're going to get stopped out. You're going to forget the stock. And then you will come back 2 months later to see that the stock rallied 40% in your direction. Now, here, we were talking about this resistance pushing the price down. But again, this green zone, the support also pushed the price right up. And this is where we finally got the breakout that we wanted. If you look at the price closely, you will see how beautiful and how pale this breakout is. The price really crawled against the ceiling and it just kept pushing and pushing and pushing till it actually broke out. Then twice it took support at that level before it finally started to rally. We don't have to wait any longer. Once the resistance is breached, it's breached. We can now change our stop loss. Where will our stop loss come? Our stop loss initially will get revised to the immediate support, the most recent low or even the next low that we can see from the current price. We chose to revise our stop loss to the level of 3,511. Now, what is the next resistance that we need to look out for? We need to look a little bit behind. This is the next resistance that we need to look out. This resistance. This was the first resistance that we waited to get breached. This is the second resistance that we're going to wait for. The second resistance did not take a lot of time, which meant we can now again revise our stop loss. Where do we revise our stop loss this time? If we don't want to be too aggressive, we don't want to trail our prices too closely. The second revision came against right below this entire green zone. Basically, what you can see here is there were lots of spikes in this zone. We'll keep the stop loss slightly below those spike zones to give the stock a little bit more breathing space. This was the second point. Now that we've revised the second point, the second stop loss, it's time to identify the next resistance. This becomes the next resistance, which means the moment the price goes above this resistance, which it did right near the level of 3,700, we can now change our stop loss again. Where will our stop loss come? To the most recent low. You can change the stop loss to this low. Once your stock has started to move with strong momentum, once it is unleashed into the rally that you were anticipating, once your stop loss has been revised to the point that it's now above your break-even level, that is your cost price, your average cost price, right? Then after that, each resistance that gets breached, you can be more aggressive in setting your stop. You basically keep revising your stop loss to the previous visible low price on the 15 or the 75-minute time. Prefer to do it on your decision-making time frame. It should actually be on your 7-minute time frame. Because see, if you understand the concept of fractalism, for every new price, for every time frame that you keep going lower, the definition at which you see the price action keeps expanding. If you're looking at the previous low on the 75-minute time frame versus the 3-minute time frame, there will be a lot of difference. Because in 3-minute time frame, you're basically seeing the prices in a lot more definition. Your stop losses will tend to be very aggressive. You don't want to do that. Stick to your decision-making time frame or maybe just one time frame lower. Usually, I've seen the stop losses set on the basis of the 70-minute time frame a lot more effective. We can again see that our resistance got breached. We revised our stop loss to 30. Now, in order to identify higher and higher resistances, now we need to keep going more and more behind on the prices. Why? Because this is a case of a buy on dip. This becomes our new resistance. And again, very quickly, this resistance also got breached over here. Our stop loss can get revised now to the previous resistance. Wherever the previous resistance was, you keep revising the stop loss to that level. Now, this resistance gets breached. We need to look for the next best resistance. This is the next best resistance zone. This one right here. We wait for the price to break out. Now, you can see clearly that when the price broke above this resistance, just look at the speed with which the rally unfolded. Crazy. This is the sweetest part of the rally. This is the strongest part of the rally. Now, we again revise our stop loss to come to this level. Now, let's take a look at the prices. Do you see some parallelism here? You see how this particular zone acted as the point where this big crash stopped and same point acted as the resistance. The moment the same point got broken, the price just shot up. Look at how parallel these points are. Now, above this level, this clearly was the next resistance zone. And again, once this price got breached, we could change our stop loss. In this situation, when you change the stop loss, right, you can bring the stop loss up very close to the price because the momentum here is insane, very fast. Even if it goes down, it's totally fine to re-enter, but you don't want to miss out on this unfolding rally. You keep your stop loss tight. Also, look at the volume pickup. Since this main resistance at 38.60 got breached, the volume pickup has been very strong, which is another signal for us that you maintain tight stop losses. It's not a problem now. We start trading. The next resistance for us to look out for is right here, which got breached pretty easily, and then this peak. This peak is actually very important. Once this peak got breached, the resistance, the next stop loss for us is the peak right before the main breakout peak. This was our stop loss for a long time. Now, you will see clearly that it's a lot harder to set a stop loss on the basis of previous price. What do? We turn to the 15-minute time frame and we keep looking at the price. And there is another tool that I like to use to keep track of the prices, because obviously I'm not going to keep opening my watch list or my holding statement and keep remembering that, oh, the stock was at this price and then it goes to this price. I use alerts. And again, for alerts, Also, instead of setting price alerts, I tend to use drawings for that. I use something called a yellow parallel line channel. What happens is that I set this channel and I set an alert on it. I click on the alarm clock that you see there and I change the trigger price to once per bar and I create it. Suppose this breakout happened. I will set the channel just high above to match the length of this up move, 2% up, 2% or maybe 1.8%. I will set my parallel channel there because at any point of time on this position now, I don't want to miss more than 2% of my profit. Every time this parallel channel gets triggers an alarm for me, I'm going to take my stop loss and I'm going to set it where the previous support is. Like, for instance, right, you can see that the price is creating a similar low points, similar candles, like candles are creating the low point around the same price. That naturally becomes the next best stop loss. Then every time this trigger happens, you keep moving the stop loss around 2-3% above the highest price. 2.5%, 3% is a little too much. And every time it keeps triggering that for you, you keep revising your stop loss higher to the previous support. Because see, you want to keep holding on to your positions as long as it continues to make higher highs. The moment it makes a lower low is when you want to get out of it. What happened here was, now you can see we've come close to the exit point. Now, literally, this exit point happened because I made a conscious decision to exit. This wasn't even a stop loss trigger. This exit was made here because the price, what it did was a little bit, in my opinion. Firstly, one thing that you will notice is the volume. So the volume had started picking up on the 15-minute time frame when the price was declining. So this made me a little uncomfortable. And then on the day of 29th November, the price opened with a gap up and then it started sliding down. When it came low enough, I decided to book my profits. Now, if I had continued to maintain what I was doing, that is revise my stop loss, wait for resistance to get breached, I could have captured these two more waves that unfolded, which probably would have added another 5% to my position. But then again, let's not be too greedy. The profit in this position was booked on the 29th of November. And again, if you go to the 75-minute time frame also, I could see some signs of little bit of a momentum exhaustion. However, the daily time frame is still very bullish. If you will see here, I think maybe another 7-8% upside here can come, but I'm not interested in re-entering because the stock is not suitable for re-entry anymore. The volume has basically started to decline. You can see this part of the rally, right? After this strong momentum, that part of the rally is unfolding on slightly declining volumes. I don't want to risk my capital unnecessarily at this point. However, I will be on the lookout for this stock to again come down and retest the 40 level on the daily time frame and the 30 level on the 75-minute time frame to re-enter, because what this daily chart is telling us that there is still a lot of juice left. If you look at ALKEM's previous unfolded rally, what you will see is that from the point of the peak to the point of the bottom, the stock took nearly 2 months. I am going to come back as a swing trader to the stock after a period of maybe 1 to 2 months. I'm going to keep it in my watch list. And when it is again ready to make a position, I'm going to re-enter it. With that, I have concluded everything that I wanted to discuss with you. The reason why I wanted to do this was so that you get a first-hand account of what it takes to trade, all the way from analyzing which stock to enter it, when to enter it, how to strategize your position creation, how to manage your active position, and finally, how to book your profits. All of those things have very minute, detailed steps. And in order to perform all of them proficiently, you need a lot of practice. Today, after having done this swing trading for nearly 3 years, I have dedicated dashboards, dedicated system, step-by-step process for everything. And everything, every single piece of my system, I teach in my advanced technical analysis class, which should have actually on second thought should have been named advanced swing trading class, because that is what I teach people. How to do professional level swing trading with very limited system and very day-to-day tools like Google Sheets, and trading view subscription, a laptop, and a simple extended monitor. If you're interested to know more about that, I'm going to share the link to my Telegram channel in the comments right now. Just click on that and you can join me. If you already use Telegram, right, then I will show you how to join my channel. Just go on Telegram and write Trade with Kavita, hit enter and then join. You will be taken to my Telegram channel where every day I post stock market related quiz, update on the recommendations that I have given to my members. Unfortunately, active recommendations are not given in the free channels. That's only in the premium channels because I'm a SEBI registered analyst and every single stock that I come up with actually takes a lot of work. In addition to that, if you also want to do swing trading on the basis of my analysis, then you can join me in my swing trading subscription plan by clicking on the gap up box. Right above this window, if you're seeing this on Economic Times, then just above this window, you can see there is Gap Up written. I am a professional listed on the platform. Gap Up is an initiative by Rigi and Economic Times, where they bring to you SEBI registered and very experienced, very professional level research analysts, so that you can take their help and plan your financial success in a professional manner rather than looking at random YouTube videos. Thank you so much for joining in. I'm Kavita signing out. Namaste.